Hey guys, good morning. I take a flyer here on NQ guys, on an NQ micro, and I actually put on a stop, went for a little walk. So I got one here. Based on my analysis, I figure NQ could rally because he's actually five five standard deviation from where he pivot and three standard deviation from the mean. And if you notice this morning, the VIX was actually red with the Dow up 220 points. So I figured that we could get a nice little pop here. So what I did, I went long. I put a stop on, went long here, put a stop on for $30, and I went for a walk and came back, and now I'm up $135 in a micro. Wasn't a bad play if you read my write-up. I actually was kind of signaling what I think could happen, am I right? So, and this is what my thought process was around what I think could happen with the Dow. Sorry, I did not stay at my desk and actually put on an E-mini. I would have made some money because I was looking for this. All right. And this is what I was thinking here, right? The only positive catalyst to the market going into Thursday cash session is usually two consecutive the VIX, etc., etc. Bob, all right. The market was actually open up green, and then the Globex market sell off on the Nasdaq on the US follow. So what I'm gonna do? I'm gonna take the profit here, $153 on $24.50 on the Dow. All right. So what we need to do is watch the VIX today because I think if hold true and the economic data is not robust, if the economic data is not robust, I think the yield gonna step back a little. Nasdaq gonna get some speed and could recover some of the losses. Don't mean that Nasdaq is actually out of the woods. The Nasdaq and the Russells in a downtrend. But we could get a sympathy bounce here. All right. And for the day, all right. Not sure what would happen tomorrow. It would be based on how we close. But on a big picture, they're all in a downtrend. All the markets. All right. Show you what I mean here on my big chart here. See, this is the Nasdaq. He's trading below the 100. 200 is here. He's in a downtrend. Everything is lined up to the downside. So RTY, the other guys, them, is trading above the 50, 55 and the 50 simple moving averages. But on NQ, the squeeze fire short. Yes, the squeeze is looking to fire short. And they all broke through some key support levels. These red lines here, they're what you call the voodoo lines, an indicator from David Starr for simple trading. Highly recommend this indicator. One of the most, the squeeze and the voodoo lines, the most powerful tools in the marketplace. Right? So that's what I was thinking there. Now, why I think the Nasdaq could get a little pop is because it's actually extended from the mean. Could extend, you could spin a downtrend for a long time, right? So look where it's at, from where it came from. This is the mean, but watch where it came from. The upper band, there's 1, 2, 3, 4, 5, 6 standard deviation move from the pivot, right? And 3 from the mean. So it's really extended here, but it's extended in a downtrend, right? Look at the VIX. One close. I was looking for the VIX to close here. This was created 7 days ago. Then it came back and it closed exactly here, the prior day, then here, and then here. If you go back and look at your chart, you could actually see when we go 2 standard deviation above the upper Bollinger Band, the market gets a sympathy bounce, right? The next session. It's kind of different in this scenario because the selling intensify yesterday, and if it continued today, if this thesis don't work and it continues today, then you could have some margin issues, right? So, follow? But so far, it wasn't panic selling; it was orderly selling because it was broad-based selling, but there wasn't a flight to safety because the yen was not doing much, and the bonds was down with the market down also. So it was like kind of orderly selling, but it wasn't like panic selling then, right? I don't know if I explained that correctly, but usually when you see panic selling, you would see people jumping into gold, jumping into the bonds, etc. But that wasn't happening, right? So it was more like they're selling, and then people start looking for the bargains, right? They're gonna start soon, right? So yes, see, my psychological market indicators is the internals. They're still indicating on markets an overbought situation. But one of the things, if you notice on those charts, is that the phases of the market is accumulation, acceleration, distribution, and deceleration. And if we look here, you have NQ is in a distribution stage. ES just joined the party yesterday on RTY is in this stage for the last 2 days with NQ. So the stages is accumulation, acceleration, distribution, deceleration, right? And NQ is down like over 5% for the month, right? If he gets down 10%, then we get into correction. But he's a long way here. But NQ could hold here, right, to this tree line here. This is from the voodoo lines, right? This was yesterday close. But today would be a different. Today he breaks right through this. But I think he stays above this tree line. This tree line, he could hold some grounds today with the sympathy bounce, as I explained with the VIX. These are all concepts that you can look at these stuff in John Carter, Mastering the Trade book. But I learned that over the years trading with those guys. You know, John Carter is one of the best traders out there. All right, so okay, guys, that's it. Okay, so I took my trades off. Reason why I took my trades off. All right, big picture, market's still in a downtrend. Look for that pivot. Got the pivot. You know, you make some money. All right. If I didn't have to go out and I should have stayed at my desk and tried to. This was a beautiful. This was like this kind of move is what you look for based on my setup here, right? See that? Trade back here to the low. Yesterday low. Bounce off yesterday low. Back up to the VPOC. This is like textbook, right? Blow through the VWAP and off she goes. Using the Ikadashi candles here to look at trend. But look at this trend. This is a perfect trend. Higher highs, all right, with nice, not spike candles, with nice even body candles. Spike candles, what happen most of the time, they come back, spike up and come back 50% of the original into the body of the candle, right? But that's it. You get to the VPOC here, where the most volume is, you want to get out, right? All right. Could always look back for another setup. Right? Okay, guys, that's it. Show you how we make some quick money, even though the market was selling off. You know why the market sell off last night? I was expecting the market to rally up on the Globex session, which it did, but the Globex market sell off last night, and that then end up pulling down the U.S. futures market. Right? If we look here, we could actually see that scenario. Look, a sea of red, guys. The Global X market, China, Hong Kong, India, New Zealand, Australia, South Korea. All right, they're all closed now and this market is open. The FTSE, London, DAX, Eurostock 50, and France, the CAC. They're all getting whacked, right? So this adding some additional pressure to the US futures. All right, that's on the composite side. If we look on the future side, same scenario. Everybody getting walked except in China, 8 share futures. He recovered. He was down also. All right, but everybody else, the DAX is down, right? But not as much as before. But look here, guys. Look at the dollar. Dollar's holding tight, right? Dollar hold up, put pressure in gold, put pressure in again, right? If you're trading crude, you're gonna play crude based on the news, right? You had a supply chain issue, crude rally, supply chain resolved, short crude, right? And if we look here at the VIX, right, right, S&P VIX, right, 85, right? It's down 85 when the futures were, well, when this morning, when I was doing my morning review, the futures was down with the Dow up, with the down 220 points. That led me to believe in my write up, I said, watch the VIX today. This is going to tell you whether that two closes above the upper Bollinger would actually give us, t- take the pressure off the indices if the VIX is going the opposite direction, right? And that's what's happening, right? See, the VIX should be up, but because we turned back here, the VIX went down. So this is why I love that actually strategy. Two closes above the Bollinger Band, they look for sympathy bounce. All right. Gotta keep track. Markets have all these behavior patterns, all right, and this, you need to keep them in mind, even though the market is selling off, right? You need to you need to stay tuned of those scenarios, right? Because most people come in and they try to short the market. I'm sure people don't understand how those big picture concept, right? They run into that trouble, right? I stated there the only positive catalyst for the market going into Thursday cash session is usually two consecutive closes of the VIX above the upper Bollinger Band. In the previous session, the market usually get the sympathy bounce. Need to watch the VIX, right? So based on that, I watched and I put on those trades based on this thesis here, and then I watched the price action since this morning at 5 o'clock, right? And see how the price action was behaving. The market wasn't have any panic selling when the globalist market was in a sea of red. It was actually holding pretty good, especially the Nasdaq. The Dow was getting whacked, but the Nasdaq was holding tight. Nasdaq was holding pretty good, right? So all these big picture scenario help you with your intraday trades, right? All right, this is my write up here. I take my time, put my thoughts together on all my learnings, and all right. Okay, guys, that's the analysis for now. Yeah, he still break previous break above the VPOC. He's back to the overnight high. All right. So these purple lines are actually the overnight session. All right. So he's trading at the overnight high. All right, pre-high. See that? Same goes for all these guys. They're back to the pre-high. All right. On Monday, actually, if you look at my write-up, I was calling for the Dow to sell off for the next couple of days based on my analysis. Was extended and the revert to the mean chart, went into a pivot zone. You have the MACD and the squeeze. MACD fire short ahead of the squeeze, giving you a heads up that if the squeeze fire short or the squeeze momentum shift, that the high probability it wouldn't be a false start and we would get the pullback, and we got the pullback. All right, a couple of days. All right. But we're not out of the woods, right? In the biggest sense, right? The charts are still broken, but you play the chart in front of you, right? We have economic data coming out today, and it would shed some light. One other thing I look at on a daily basis, we look here at the yield, US 10-year Treasury, right? We kind of look to see what's happening here. Scenario, yield goes up, interest rate goes up, dollar get a pop, bank stocks, big banks goes up, right? Goldman Sachs, JP Morgan, and some of the credit card companies. You could look at that. So you get a pivot out of growth and into financials, materials, right? And industrials, right? Yield goes up. People start worrying about inflation. Interest rate goes up. CapEx spending goes down. And growth stocks, people pivot out to growth stocks because of valuation issues, and they go into value stocks. All these scenarios you need to keep in mind, right? So this is where I look to get my real-time data. I plot an indicator to show the 10-year versus the 30-year, but this is a little simpler to use. Okay, guys, that's it.